What's going on, everyone? We're going to get a little bit of a game plan going into tomorrow. Tomorrow is going to be August the 15th, which is Friday. Now, first things first, I always go into Fridays with a mindset of I look at what I've done for this week and I don't want to lose any money, right? Now, that should be the plan every day to try to protect that capital, not lose money. But regardless if you're green $1,000, you're red $1,000, we want to protect that as much as possible. Okay. So we don't want to turn $1,000 losing week into a $5,000 losing week. In almost the same way for your wins, right? If you have $1,000, you really don't want to look at it in a terms where you're trying to make $10,000 on a Friday. But if you can protect that $1,000, make $100 here, lose $100, make $200, lose $200, we can ensure that we're going to finish the week positive, right? And for myself, I'm a very performance-based trader. So I look at performance in terms of, am I doing the right things? And if I'm doing the right things, my performance is going to be good. Um, and when you look at yourself as a performance-driven, results-driven trader, you tend to get out of the mindset of I want to make a bunch of cash on any one specific day. You kind of just want to keep rolling and compounding, okay? Rolling and compounding. So if we look at some of the levels that I have, we're going to start off by looking at this 1 hour chart. Some of the levels that I have on the screen today is going to be the daily 5 simple moving average, which is the green line that you see on my screen. We're also going to be looking at today's highs. So I do have this high wick here. I can kind of adjust it just a little bit. 24,010 is what I'm looking at to the high side. I'm definitely looking at this low from pre-market. I'm looking at this linear regression at 23,745. I'm looking at this upper linear regression at 24,068. That's also correlating with yesterday's high wick from the open and pre-market. So given right now, futures market's pretty flat. We're a little bit higher than where we closed today's session, which is fine. Typically, the higher we go in the overnight London session, what I'm looking for now that we're kind of underneath a previous day's channel, so we're trading below today's high price, what I'm looking at here is as long as we're trading below that, you kind of want to give a little bit more respect to the sellers, meaning that you might look to short into some of the upcoming supply zones. So closer to 24,000, 24,010. If we don't reclaim that area, you want to look for a little bit of a pullback, look for that rejection zone back into your supports. Now, if we start to trade below 23,865, that would be trading below our daily 5 SMA. In a situation like that, I'm going to be targeting this low point down here at 23,793. So short in this range, as long as we're above this range, don't look for the short until we meet supply. Everything else in between, treat it as a scalp. 5-point scalp here, 10-point scalp there. When you get into those smaller time frames, whether you're playing an ORB breakout or a breakdown or a 20 SMA trade, keep your scalps to a minimum. Just try to log in any kind of green day that you can log in, any kind of green trade that you can log in when you're in the middle of this range. So again, I'll just repeat that. In between 23,865 and 24,000, you're thinking scalps and scalps only. Okay, whether you're getting a short time frame, smaller time frame setup, long or short, get in and out, right? Protect that downside risk. If we start to close on an hour time frame, on a 4-hour time frame, if we start to close below 23,867, maybe now we can open up those targets just a little bit more. I would expect a little bit more momentum to the downside below 865. The same rules apply. If we reclaim and we close over 24,000, I would expect a lot more juice and a lot more momentum into 24,060. So in that particular case, you're looking for 50 points worth of upside there. Not to say that you need to snag the full 50 points, but maybe instead of looking for a 5-point take profit, you can look for a 15 or 20. Instead of looking for a 10-point take profit, maybe look for 25 to 35 points. The same rules apply to the downside if we get below that daily 5 SMA. And everything in between, you're just looking for those quick scalps. Treat it as cash flow, treat it as a very quick scalp. Again, we're right in the middle, okay? In the middle of this upper portion of the linear regression. So truthfully speaking, we can come all the way down to 23,740. We can go as high as 24,000. So with that 250 point gap, the market can go up or down, right? And as conflicting as that may sound, it creates a very solid plan, because in between that range, in the middle of the range, you're thinking scalp. If you lose the bottom of the range, 23,744, or you reclaim 24,060, then you can think breakout, breakdown. Okay, so I hope that helps you guys, give you just a little bit of a perspective. If we open up above today's high, be careful, because you have supply at 24,066. So depending on how high we open up, the closer we are to 24,066 can take you off of that long trade. But if you're right at the verge of confirming today's high, you do have some room there for that opening drive scalp into 60s, lock in those profits and go away. If we're trading just above the daily 5 SMA and we break through 23,865 to the downside, you should be able to catch an opening drive trade, 5, 10, 15 points very, very quickly, size appropriately, get in, get green, and get out. I hope you guys are all having a fantastic trading week. If not, hang in there. Trading is not the easiest thing to do. But again, if you stick to the consistency and you stick to your setups that you know you take on a regular basis, you're going to do just fine. People tend to go off the rails when they try to battle back and they try to get revengeful and they try to size up and they try to get overly confident in the setups that they're taking. Trading is a very, very slow process, meaning you can make a lot of money very, very quickly, but nothing changes on a day-to-day basis. No one day or no one trade's really going to retire you. You still have to come back and do this tomorrow. So treat it as such. Don't look for the easy out. Regardless of how much money you think you can make today, you still have to come back and trade tomorrow and next week and next month and next year, and you can build a decent living for yourself. But the moment you start to overtrade and you start to think that you're going to take, $50,000 payouts every single month, is when you get yourself into a little bit of trouble. This is a slow process. We just want to make sure we can show up every single day and continue to grind this out and make some cash. Hope you guys all have a fantastic end of the week and a great weekend. I will see all of you guys on the trade floor.